In October 2025, everyone expected the usual market's panic, gold shines, crypto crashes, but this time gold, the so-called safe haven, collapsed first. After a 2-year surge, gold dropped nearly 7% from its peak, erasing $2.5 trillion in value almost overnight. The world's security blanket suddenly looked threadbare. Meanwhile, crypto braced for disaster, but the crash everyone expected didn't come. Bitcoin dipped, but compared to gold's meltdown, it was a minor stumble. For the first time, the old guard was the casualty, not the upstart. This flipped a century-old assumption. In crisis, gold would shine, and crypto would crumble. Instead, Bitcoin and gold decoupled. Bitcoin stood on its own as a new asset class. The 2020 round, bonded now, non 25. Can de gra de demas. Crash wasn't just about crypto, it was about gold's fragility and a new definition of financial safety. The world had to rethink what safe haven really means. The rules had changed, and everyone was watching. While gold was melting down, crypto faced its own trial. A $19 billion liquidation event. Bitcoin plunged to a 4-month low of $104,000, and panic headlines started flying, but the freefall stopped. Fast. Instead of a prolonged winter, the market found its footing and began to recover within days. The system absorbed the shock and didn't collapse. It was like a boxer taking a punch, staggering, then stepping forward stronger. The dip became a buying opportunity, not a death sentence. Analysts doubled down on bullish forecasts. The market's resilience stunned even its harshest critics. Why didn't crypto implode? Because self-correcting markets work. The gold crash was a correction after a wild run-up. Too many people chasing the same trade. Crypto's $19 billion liquidation flushed out risky, over-leveraged bets. Painful, yes, but necessary. A system purge that made the market healthier. Unlike 2008, where hidden risks infected everything, crypto's losses were transparent and quickly absorbed. No bailouts, no cover-ups, just a brutally efficient reset. The system bent, but didn't break. Automated liquidations and transparent ledgers acted as pressure valves. The crash proved crypto's market structure was built to withstand shocks. Crypto's resilience isn't new, it's built on a history of comebacks. Bitcoin survived the 2018 crash, the 2020 COVID plunge, and soared to new highs after ETF approval in 2024. Binance paid a $4.3 billion fine, lost its founder, and still bounced back stronger than ever. Solana went from network outages and FTX fallout to 100% uptime and institutional adoption. XRP fought the SEC for years, won clarity in court, and was relisted, sparking a market revival. Each time, the ecosystem adapted, improved, and refused to die. The 2025 crash was just the latest test, and crypto passed. These stories aren't about luck, they're about deep roots and relentless innovation. Every setback became a setup for a stronger comeback. The market's ability to recover is its defining trait. Resilience is in crypto's DNA. The cycle continues. The 2020 summon started when second 45 seems on. 45 crash was different because the players had changed. Institutions, asset managers, pension funds, corporations now anchor the market. They don't panic sell, they buy the dip, creating stability. Global ETF approvals like Hong Kong's Solana ETF signaled mainstream confidence. Traditional finance now props up the crypto world. Meanwhile, DeFi protocols matured, offering real financial services on-chain. During the crash, platforms like Aave used protocol revenue for buybacks, reinforcing stability. The system now generates and reinvests real value, not just hype. Big money and smart code together created a foundation far stronger than in past cycles. Crypto isn't just surviving, it's evolving. After the chaos of October 2025, the picture was clear. Crypto didn't fail, it matured. Gold's collapse shattered old assumptions, while crypto took a massive hit and bounced back. Most top coins were green again within a week. The system's ability to self-correct, flush out excess, and recover without bailouts is its greatest strength. Years of development, institutional support, and DeFi innovation paid off. Crypto proved it's not just a casino, but a developing economy with real defenses. The 2020 chart show eine Tron, body tins für bat C. Sorgin Saurumbadras, Cardira, but they dots dus dasig of Mauafenar. Des Brocken Sarit showed independence from traditional assets and true resilience. The ability to crash, self-correct, and recover is the ultimate proof the system works. That's the most bullish signal of all. The future of finance just got a lot more interesting.